falling prices, plummeting trade figures, rising unemployment, a worsening real estate crisis, and now big drops in local stock markets. China's economy was expected to make a big recovery after it lifted harsh COVID restrictions in 2022. But the recent numbers paint a bleak picture for officials, who are now hoping to keep things from completely spiraling. Even the country's citizens are feeling the squeeze, as layoffs and pay cuts hit workers across multiple industries.
感觉2023年挺难的，因为工厂的效益不是特别好，然后呢，整个大环境也比较差，感觉比往年都难。
比如说我们那个公司关了很多连锁店。
OK。
对，然后的话也有在裁员，工资的话也稍微有一点影响。
其实保险行业都在裁员，在就是优化，在减薪。核心的逻辑实际是我个人感觉是供需关系的问题。
GDP did pick up last year, growing 5.2%, a rise from the 3% seen in 2022. But that hasn't been enough to reverse declining sentiment among businesses and consumers. The grim outlook has led foreign investors to pull out in droves from China's markets, which were sent tumbling last month. The SSE Composite Index, which tracks all stocks traded on the Shanghai Stock Exchange, dropped to its lowest point in several years amid signs of panic selling. Though it's made a weak recovery, analysts say the big issue is real estate, brought back into focus by the recent downfall of developer Evergrande. The property giant sent China's economy into a tailspin when it defaulted on its debts in 2021. And in late January, a Hong Kong court ordered Evergrande to liquidate, dealing a further blow to confidence in China's real estate market.
So this is the key thing that affecting the stock market itself, because as we all know, the real estate market, the negative wealth effects may affect the consumer behavior and expenditure. So this is maybe one thing to drag down the economy in the longer term.
China's Securities Commission has said it will step in to stabilize markets, including cracking down on things like market manipulation and insider trading. But other issues with China's economy, like slumping imports and exports, could impact Taiwan, which relies heavily on its trade with China. A significant number of foreign investors in China are also Taiwanese, further exposing Taiwan's economy to the stutters happening across the strait. Analysts say this could drag down economic growth in Taiwan.
We're still talking about 35% of exports going to China, and 50% of FDI are also in China as well. I think if we continue to see a deceleration of economic growth in China in, let's say, the next decade, from right now around 5% to 4%, I wouldn't be surprised that we will see Taiwan's GDP growth decelerate by basically around 0.4%.
Taiwan has also been trying to reduce its economic reliance on China, which claims sovereignty over Taiwan and frequently uses economic and political pressure to try to achieve its goal of taking the country. But the ripple effects of a continuing slowdown could reach even those countries, like Taiwan, that have worked to de-risk from the world's second largest economy. Joseph Wu and Jeremy Olivier for TaiwanPlus.